What's up, guys? How you doing? All right, what we got going on? How you doing, SD Willie, Lex Leone, and Let's Mars? How you going? Below 20k on the pullback, Rick. Look, I don't think so. I don't think it's gonna go that deep. However, you know, this is barely any closer to the pullback we had on the weekend here. You know, I'm not stressing yet. I think it's looking mighty fine. It's not too bad. I think this is expected. You know, we needed to get some kind of corrective move before, you know, taking off to the next level. So now these boxes, remember, these are the weekends. So that's previous weekend or the weekend before last. This is last weekend right here. Now, in the stock market, I believe we've popped up out of that downtrend once again. However, we need to sort of make a clear break away from this zone and then, you know, start attacking these highs here. So we really need to get above 410, maybe head up to 420. So that's the big challenge, the big next challenge, I suppose. Now, when do we have? I don't have it on this chart. I was going to see if I had the funds rate line. Oh, here it is. It'll be on this chart. So let me scroll out on, say, like the 4 hour. All right. You can see here we are approaching the funds rate decision. So that's going to be a big deal to see how the Fed is going to set up their next interest rate decision. Hopefully it's only a 25 basis point increase and not a 50 basis point increase. As far as we know, inflation has been coming down as, you know, expected and as targeted by the Fed. So I don't see why they need to tighten up further than they already have it. It's currently at 4.5%, the interest rate. So taking it to 5, I think would be, you know, I don't expect it to go any higher than 5 altogether. Now, they said that they will be, you know, remaining tight until they hit their target of 2%. So in that respect, there will be further increases, but it's not going to be as vicious as last year. It's not going to be as extreme and fast. I think their plan, Jerome Powell said something along the lines of, we're going to be doing it over, you know, a stretch of time. So there's like, it's not all at once and it's not rapid. It's just it's like an easy, like a very slow increase until, you know, they really get a grip on or get a handle on inflation. So should be looking not too bad moving forward from here. Bart Simpson down to 20.7. Let's see. It's possible. It's possible. I don't want to say that no, we can't go below 20, because obviously it can happen. I think there's some other key levels to look at before we think about anything below 20, and that is the support zone of this consolidation area and also the resistance zone of this consolidation area. So those two levels there, for me, are, you know, somewhat of price structure, this potential support. So I'll put like yellow lines just to show you like where roughly that structure lies. Something like that. Now, if you want prices, I think there's going to be at least some kind of reaction of 21,500 if we even go that deep. And if we smash through that, then 20,500. So like every 500 increment as we go down should have some form of reaction. Whether it's the pivot point, that's yet to be seen. But I guess the point is like, yeah, every sort of key level in price tends to have an effect. You can see 20,500 was acting as support. 21,000 was acting as like a resistance and a support in many examples here. Like, you know, you can see resistance here, you can see some support here, you can see, you know, it's sticky around here. There's a 21,500 resistance here. There's a 20,500 support here, you know? So you can see these 500 increment levels seem to have some kind of impact, or except for 22K for some reason. There was no activity at that level. It's pretty much, it's been a 22.5 support at the moment, and a 23.5, let's say. I mean, we didn't quite get to 23.5, but it's where that orange line is. That's the current range that we're stuck in. So until we lose that range, I'm not super expecting a deep pullback yet, a deep correction. Now, most charts do a price correction. So when something goes high, it'll retrace to a certain level or price, right? Now there is something called, there's another like sort of theory on it, and it's called a time correction. So what the chart will do, in this case Bitcoin, it'll come up, and this would be a time correction. So it'll just stay flat for some period, letting the oscillators cool off. So you can see the oscillators were really hot on the 1 hour chart here, and you can see the effect of the time correction here has allowed the RSI to cool back down and almost go to an oversold state. Now every time frame obviously is going to give you a different reading for what stage of the pullback or the strength that we're in. Let me just make this a bit taller so we can see. Let's go to the weekly. So you can see the weekly is barely even, you know, coming up. Let me hide that. The weekly chart, it's only just crossed the neutral line, the 50, right? So at the moment we're at 56. So it's a little bit above neutral. It's on the more optimistic side, the buying side. And if I hide these levels, okay, I'm just going to hide them too because we're macro at the moment. Okay, so from an RSI perspective on the weekly chart, there is plenty of room to still move up. That doesn't mean that it's going to happen all in one shot, right? It's going to staircase up, if anything. And I guess that's why we're slowing down a little here. Like perhaps we need to pull back a touch before RSI, you know, can work its way up. And that might take a couple of months. Like it might take a few months. So that's the weekly. Now let's check the daily as well. The daily is very elevated. And we're sort of seeing a slowdown here. So you see these two sort of like plateaus on RSI, just here and here. These are the flat periods that we've been through, like over the weekend, for example. So, and there is a bit of divergence there too, bearish divergence. So if you take the highs, and you know, this is basically getting dealt with as we speak, this divergence, I believe. And that's the reason we're sort of pulling back at the moment. And let's say, yeah, just through there generally. That's the general idea, right? That's bearish divergence. We haven't got a reading on it yet on the divergence indicator like this, but I'm sure it's going to come in at some point very soon. But yeah, where are we? We're on the daily chart. So, I mean, how high can the daily RSI get before, like, what's the record high? Let's have a look. I mean, we're pretty damn high. I think it's pretty hard to beat that. Let's put a line at it and then just see if there's any other previous price history that has an RSI reading that elevated. So we'll make it yellow. So it's about there, 89.57. Let me just get the labels or the value in the status line, which is down here. So there's the status line. And we want to target that high. So it's 89.40. So let's get that dialed in. 89.40. Okay. See, this is how you measure out the coordinates exactly. You get the reading in the status line, which are these little white numbers here for the indicator. And to turn that on, just open up your indicator settings, go to style, and turn on. They're on by default, but I like to turn them off. But anyway, down here, values in status line. And I usually turn off the labels on price scale, like over here, because it covers everything up. I don't like it. I just turn it off. Anyway, so 89.40. Have we ever had that in the past? And look, I mean, all through the bull market, you know, this is the kind of RSI heat that we get in a bull market. Let's go full screen on the RSI here. See, this reading here was 89.57, so it's only a little bit higher than where we are right now with the RSI. That shows you how heavy this buying has been, like how strong this bull trend has been. It's been crazy. It ain't no joke, put it that way. This one's a little higher, 89.99. This one's definitely higher. This was the, what was this? This is the all-time high area of 2017. So when we first went to 20K, first time. But yeah, you can see, just relatively speaking, we are at record, you know, the record kind of area of RSI on the daily. Pretty damn hot. Now, with that being said, an RSI reading on the daily chart of around 90 does not mean that we're going to pivot down to another bear market or back into the bear market. And I'll show you why that's the case. So look at this run up here. Okay, so we hit 89.57 right here, right? That's here, right there. Was that the top of the market? Look right, no. Look how many other peaks we had that went higher and higher. So, you know, higher price, lower RSI reading, higher price again, lower RSI reading, higher price again, lower RSI reading. Let me carry on. Higher price up here, even lower RSI. So you can see the entire bull market was full of bearish divergence because the price went so drastically high, and but nothing compared to this push in strength. This push here was the most committed and real. Every other push after that wasn't as strong, even though it scored a higher price. Now, the reason for that is because there was a lot of Bitcoin to be sold at these levels, whereas up here, you know, there's no resistance up here. There's no previous pivots to work off. It's all uncharted territory. So it takes a lot less effort to push price once you get into that blue sky environment. And you can see with the relative strength, it doesn't take as much strength to get the prices that high. So that's why there's all this bearish divergence. Anyway, that's That's RSI. RSI is not a pivot indicator. It's just measuring the strength of the move. And divergence is kind of like, you can see that divergence doesn't even pick the top as a pivot. Divergence just means there's a probable or possible pullback on the way, like a correction. However, with these corrections, we still maintained an uptrend, didn't we? So, by no means does a hot RSI mean the end of it. That's my point. Okay, so we've done the daily. Let's go back to the 4 hour and see how that's tracking on the RSI. So that's corrected nice. We're like back to neutral here, neutral heat. So, and through the entire year, you can see that the RSI has been finding support, in these levels here. Here was the most recent one here. And we're sort of back down to that similar zone. So could that be a sign that we're sort of approaching that same area where the RSI likes to reset before the next, leg up? Now, obviously, price can drop a lot lower. It just depends on the market, right? If there's enough sellers to counteract the demand, then the price will come down, and vice versa. So this, I by no means is this pullback anything to be fearing. If you're if you're expecting further activity and further rally, I would say until key levels get broken, there's nothing to stress about, to be honest. I'm going to turn the EMAs on. Look how far we are away from this 200 moving average. This is the 4 hour chart. Let me check the daily. Okay, the daily, we only recently crossed the 200 on the daily here. So here's another interesting comparison if you want to look at sort of how Bitcoin can behave similar to what it has in the past. When we first came up out of the bear market just recently and popped up above this 200 EMA, that's fairly significant. We're trying to see now where the support is so that we can get permission to move higher if at all. So obviously this can come back down and dip under, but I'll show you a similar kind of behavior that Bitcoin's done after a bear market, because this behavior here is after a bull, this behavior here is after an all-time high. So it's not, I don't feel like it's an even playing field there. I think the most similar thing that we have, the most similar setup that we have is this. So see how we came out of a bear cycle right here, and we got up over the 200. Does that look familiar? Let's zoom in on that. Tell me that doesn't look familiar. It's kind of like what we're doing right now, right? We're pulling back after cracking that 200 EMA on the daily chart. And then look what happens. It gets its stability or its support and starts trending higher. And, then you get the proper relief rally. This is the relief rally. You can see how elevated that got above the 200 daily moving average EMA. So by no means, I know it feels like this is the end, we've sort of capped our limits, in this zone. But, let me grab a screenshot of this little bit here. I'm going to turn off the other EMAs here just so it's clearer for everybody. So we're just focusing on the yellow line here. Go full screen. Okay, we got the daily. This is the 200 daily exponential moving average from the 2018-2019 cycle. So coming out of the bear and into the relief rally. This is a pretty decent relief rally. Now, just because it did this well, obviously it's a different setup. We're in a different macroeconomic environment to what we were back in 2019. So, It's not a perfect like correlation or comparison, but it's the best we got, I believe. Now let me grab a. I'm just gonna use paint for this because I want to put them side by side. I just want to get a nice visual. So we've got space for the next one. And let's go across and find the current part of the chart that we're in. Scale it for just so you can see what's happening. By the way, this bear market has been pretty damn violent. You can see that it's crazy. All right, there's our other one. So that's the current one. Let's get paint back. Let's paste the current view in. So can you see a pattern? Let me grab like a bright color here. Let's go green. So underneath the 200 in the bear cycle, see this bear cycle actually, it wasn't as violent in certain parts. Like we actually had tests of the 200 EMA, you know, come up to test it. In this cycle, we're nowhere near it. We're miles away from the 200 EMA here on these highs. So very, you know, very key difference there. But you can see it's similar. We get this sort of like crypto winter kind of spot, just like over here. We get the pop, we pop up over it, pop. Now this shows that we chopped sideways for like probably 3 weeks, give or take. And this shows that we've chopped sideways for 1 week so far. So could that be what's on the cards for us? You know, could we do this and then start the next leg up? You know, I mean, just look at the potential there. If we get anything similar to that, that's going to be incredible. Let's go back to the chart and I'm going to grab a fractal. Okay, let's grab a fractal and we'll try and make it as fair as possible to the so we'll grab it through the crypto, the quote-unquote crypto winter, right? And I'll just grab like what could be happening. So that's a complete replica of that. Now I'm gonna have to like squeeze it for the time difference, right? I'll keep the price the same, but I'll try to just squeeze the price, the time frame, because we've sort of hit a bit quicker this time around. So it's something like that, right? So this shows there's potential for us to come up and test at least these highs here, which is 25K, right? But perhaps even higher. Now, obviously, this is getting it like, this is like sort of taking it to like a hopium kind of level, but this isn't out of the realm of possibility, this kind of action here either. You know, this relief rally could have some, it just depends what's happening with, you know, the macroeconomic factors like the Fed and inflation. You know, if those improve, if both of those factors improve, you know, if interest rates come down and inflation comes down, you know, that's rocket fuel for this kind of move, you know, recovery. By no means are we coming back to all-time highs this year. I don't want to rule it out completely, but it's very unlikely that we come back up to all-time highs. We might get lucky and get to 48K this year, but I think a more realistic target, you know, something to look for so far would be 30. Just as, you know, as a relief rally. So yeah, that's the best I can do for some kind of prediction. And obviously I try to stay unbiased. You know that I like to see the market appreciate in value and bring money into it for more activity. But the only reason I don't mind it coming down is because it creates an opportunity to buy, right? But anyway, okay, here's my bearish kind of like opinion on what might happen. So we've popped up just like over this 200 EMA recently, right? That could be something like this, or like this, or like that, or like that. Like where it pops up, but it doesn't mean much, you know? Like it could just be like a little brief, you know, that was as good as the relief rally we were going to get, you know? I think that's the least likely scenario. I know the bears think that that's, you know, that's not even close to what they're expecting. You know, a lot of people are still expecting $12,000, $10,000, right? But I think you've got to really pay respect and pay attention to what's happening on, you know, in the world around us. What has the primary influence on the market? And that seems to be inflation and the interest rates in the US. Those are the two major factors. They are the factors that cause this crash. They're the factors that cause FTX to collapse. Well, not directly, indirectly, right? The direct reason for their collapse was, you know, completely failing to operate, you know, how you're supposed to operate an exchange in crypto, I suppose. Very destructive behavior, you know, commingling funds, taking out their customers' funds and using it on leverage with, you know, just crazy trades in the market. Anyway, that's beside the point. But all of that seems to be over now. That chapter, we've sort of turned a page. You can see that, you know, that was this chapter. And now we've started a new chapter here. We've sort of recovered off that damage. And I think everyone's kind of like almost forgot about, you know, there was a point where we were hearing about Sam Bankman-Fried and SBF and FTX daily, like through this section here. When SBF got arrested and like taken back to the US from what's that country called? The Bahamas? Yeah, the Bahamas. When he got taken back from the Bahamas, it was like somewhere. It caused an optimistic change in the price when he got extradited, right? I think we started to sort of travel up. I think it was late last year. I don't know. I can't really remember the dates, but anyway. So yeah, that's pretty much my outlook there. Now I'm gonna turn off the EMA cross. I'm gonna see if I can show you something here. Macro analysis. Yeah. Okay. Here we go. So we've got. I need to go grab a moving average. So I'm gonna close the Bollinger Bands and just grab a moving average like this, and I'm going to make it yellow, my favorite for moving averages, and 200, and we're going to set it to the daily, so time frame 1 day. By default, this is just set to chart, so whatever time frame you're on, it replicates the 200 EMA on that chart, or MA rather. Okay, so we'll hit OK there. It's locked to the daily, 200 daily moving average. Now, in this chart, if I go logarithmic, this will make a bit more sense. Let's just go through each color. So let's begin with the green. This was the 2016-2017 bull market, obviously. Now, why is that the case? That is the case because, whoa, static. Please buy a TradingView subscription. My man, appreciate that, man. That's very generous of you. Static's a legend, ladies and gentlemen. All right. Yeah, so the green, that threw me a bit. The green, bull market, right? Now, if you ask me, my definition of a bull market and a bull market starts when you get above the 200 daily simple moving average, and a bear market starts when you get below the 200 daily simple moving average. Now, price can obviously dance around that line, and it can get, that period can be a little indecisive. It's like, oh, are we in one or are we out of one? But yeah, you can see bull market 2016, 2017, bull market of 2020, 2021 is here as well. Now the bear market here, this was the 2018 bear market. We popped up out of the bear market and did a relief rally, technically a bull market. It was a baby one. It wasn't an all-time high achieving bull market, but a bull market nonetheless. And then we had a return to the bear market. Like, it's like things took off optimistically early before the halving, right? Yeah, buy, not buy. No worries, man. But yeah, like, look, we got back below the 200 simple moving average. Oh, you're off, are you? No worries, Static. Thanks for popping in, man, and I really appreciate the generous donation there. And yeah, I will be getting a TradingView subscription. Thank you. Okay, so yeah, return to the bear market, getting back below the 200. Obviously this whole zone here was just choppy, like very choppy. So we didn't have a clear, direction. And then we had obviously the COVID-19 crash, our black swan event, which created like a slingshot effect and really got us back into the bull market. And primary reason, the Federal Reserve did quantitative easing in a big way, printed out lots of money, thus, basically to rescue the economy, really, like keep things running, keep the lights on, keep the food coming. It was necessary, right? It was a necessary evil, or a necessary harm, I suppose. I don't know what the word would be. Anyway, you can see here I've got labeled a false start of the bull market, which was interrupted by the pandemic. So, it looked like we might have started getting into the bull market here, like back in January of 2020, like kind of like what we have here. We've got a January 2023 start. We've popped up over the 200, right? So fingers crossed some black swan event doesn't come and ruin the party and get us to snap back below. But hey, it can happen. Like, this is proof that it can happen, right? Something black swan, something dramatic, something negative can come up out of nowhere and just catch everyone by surprise. And, the market can dip 50%. So, maybe that's the scenario where we come to 10K or, 8K, whatever. It is by some global disaster, I think we'd be very unlucky to have something as bad as COVID-19 come and ruin the party again, and decimate the world. I feel like the Russia-Ukraine situation, as bad as it is, I feel like a lot of that has been priced in and it's not a surprise. Like, it's not catching us by surprise. We've seen it unfold over the course of 12 months or more. So I don't think that's going to catch markets by surprise if anything happens there. Maybe if they launch nukes, that would be surprising or very devastating. But anyway, let's see. Yes, Putin can still ruin the party, of course. Yeah. Would it be, I don't know, I guess you'd have to go and check, scenarios to where that would happen, and how that would happen. At the moment, Russia is in the middle of winter, right? So, conducting a conflict in winter is very tough, very hard to do in that part of the world. I've heard, like, the logistics of getting your military and your tanks into another country when everything's frozen over, and like there's you know, deep snow and ice. Like I think we won't see activity until, you know, that part of that season is over, and maybe that's where they, you know, escalate again. But yeah, I mean, there's still operations going on there, but very unfortunate, very sad time in history. Anyway, you can see obviously we sprung up out of COVID. You know, the world was still getting ravaged by the, you know, the fallout of all that. It was just a mess. 2020, 2021 was a nightmare for everybody. I don't think anyone had a good time during that period. Now, on the other hand, you know, I'm talking about real world scenario, like, you know, in the real world, but like in markets, in a market sense, like it did create a big opportunity, like, you know, an opportunity out of a crisis, which seems kind of like dirty, but I mean, that's exactly what it is. It created this perfect storm for a huge bull market. You know, it was the perfect storm being, we just crossed the Bitcoin halving. There was the monetary policy supported really bullish activity. The stock market soared to all-time highs. You know, it was the perfect storm for a huge bull run. So, you know, that's just what we got. That's what we got. Just as this had its perfect storm, like, which caused that. But yeah, we've never seen a recession with crypto like what we've been through. Arguably Q3, Q4, or was it Q2, Q3 of 2022 of last year? That was 2 consecutive quarters of negative GDP. Now, Q4 GDP is coming in good, optimistic. So it's actually stamped out that whole recession theory, right? Or that recession forecast. I'll show you what I mean. We go to the Forex Factory calendar. Now, what's coming up? We got tomorrow, for me, 26th of January. So, you know, we got advanced GDP. Now, this is the GDP reading that comes in that has the most impact on price. And let's just see, they're forecasting a GDP of 2.6%. The actual reading is called final GDP. So you can see here, while this quarterly data is reported in an annualized format, quarterly change times 4, there are 3 versions of GDP released a month apart: advanced, preliminary, and final. The advanced release is the earliest and thus tends to have the most impact. So we're getting that tomorrow. We're getting advanced release of GDP. Now, the advanced, preliminary, and final aren't always the same reading. Like, advanced is kind of like before, like it's kind of like a forecast in a way, but for some reason the advance has the most impact on price. So forecast for the advance reading is 2.6% GDP, which is awesome. That's, if we had anything close to 2.6%, that means we've had 2 consecutive quarters of positive growth. So you can see in Q2 and Q3, we had negative GDP, which is technically, by old terms, a recession. Two negative quarters. Let's go through the list. Now, even though these numbers are red and green, just focus on whether they're a positive or negative number. So positive, 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 negative, negative. So there was a recession during COVID. So this is, you know, in the wake of the COVID crash, and this was the world dealing with that crash. It went down, you know, essentially everything went locked down. Supply chains completely screwed up globally. That's why the GDP was negative 32.9% at that time. But the spring back, look at that, 33.1% GDP for Q4 of 2020. That's pretty damn incredible. Like, huge spike down, huge spike up in GDP. I don't know I don't pretend to know how they get the GDP readings exactly, but I know it's like a measure of product, the country's productivity of selling things, gross domestic product. Now, so that's 2 negative quarters in a row. We've just had 2 negative quarters in a row from 2022. But otherwise, every other quarter, there is some degree of growth, That's why these aren't recessions. This isn't recessionary. This reading here, this 2.6% from Q4 of last year, I think that's got a lot to do with why we've turned a corner and we've started heading up. I think things are starting to look optimistic, right? So unless the next GDP reading comes out drastically low or even negative, I think we're looking okay. I think we're going to be okay. So yeah, let's go down. I don't think, look at all, these are all positive readings in GDP. GDP is good. There was a brief negative one in 2013, negative quarter, down 0.1%, almost nothing, a break even there for GDP. But let's go down the list. Where's the, here's the global financial crisis. Negative quarter, negative, negative, negative. That's 4 quarters in a row. That puts into perspective that 2022 is nothing compared to the GFC, guys. People are trying to paint 2022 and what we're in right now as equal or, to be worse than the GFC. There's no evidence of that. Like, the evidence is not suggesting that at all. I think this is just due to the fallout of COVID, But hey, who knows what's around the corner? I don't know what market is propped up like crazy that's going to crash, because the housing market certainly did in 2020, 2008, 2009 GFC. That's the whole causation of it. But as you can see, like, America doesn't have too much of a hard time getting back on its feet after these recessions. So yeah, nothing to fear. I don't think, like, we shouldn't be shivering in the corner over last year. I think it was just a necessary pain that we had to go through in light of, or in reaction to, COVID and the shake-up that caused. But yeah, we just want stability. We want the financial markets around the world, just global economy to be stable and predictable. That's what we want. That creates a nice environment for markets. You want fine weather for sailing. All right, so what happened here? We had inflation. The peak of inflation was 9.2%. I think it happened in June or July of 2021. So around here, around this area is where we got peak inflation. So inflation was already creeping up, in this period here. So inflation peaked, and then here come the Fed with their crazy interest rate hikes, which is a necessary evil to bring inflation down, right? But look, this was the pain. This is us paying the price for how good this was, Do you think we've paid our dues? Like, do you think it's even Stevens now? Do you think this has been paid for by this? That's the big question. Like, I know I'm pointing at the Bitcoin chart, but what I mean is, like, the global economy, the pain, the damage that was caused by this was, like the quantitative easing. And now they're trying to fix that issue with the quantitative tightening, the QT, which is kind of like what we're in the midst of right now. The high interest rates, quantitative tightening. Now, when they print money, when they dilute the money supply, that's quantitative easing. So they're basically easing the burdens on the economy by supplying, like, getting a lot of liquidity out there, getting the market moving like a well-greased machine. All right, now remember the all-time high of 69K up here. that was, a lot of people call that manipulation. You know, that it was manipulated up to those levels. And you can certainly see the evidence for it on the RSI as well. If we zoom in, turn logarithmic off. So RSI really hot through this area. So natural, you know, buy pressure. And then this second push, it wasn't really as strong at all compared to that first push, but it went higher in price. So I call that, well, I'm going to class that and label that as manipulation, price manipulation. So the bear market really did kind of start here when we popped below the 200 daily simple moving average for me. A lot of people also call it when there's the death cross, when the 50 crosses below the 200, which happens somewhere like that. But yeah, anyway, it's a similar kind of thing, right? You get below the 200, you go bearish. You get above the 200, you go bullish, right? Above it, bullish. So yeah, that's my notes. That's what I got. Now, us price getting above the 200 daily moving average could be a relief rally similar to the one we had in 2019. So this orange one, which suggests that this is just getting started, right? I mean, look, if I take a bars pattern from the breakout of the 200, bring it up like that. So like that, and we take it to the breakout here, that gets us that target of around 50, 55, maybe even 60. That would be pretty damn incredible, but I think obviously it has to be scaled. It's not the same scale. It's hard to get, you know, and it's not going to be perfectly the same. It's just, it may behave similar. That's the key. And what else do I have here? Or could be the start of a bull market. So that would be the optimistic case. Like this is, you know, this is the turning point and there's no coming back until we get a new all-time high. Yada, 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 hopium, hopium, hopium. So that's my macro analysis for Bitcoin. And that's how it stands until we get more activity off the 200. But look, we're above the 200 daily moving average. We're looking pretty good. GDP's looking hopeful. The forecast is up, so it's not negative GDP, it's positive. That's good. The Trueflation website, we're just trying to get as many hints as possible as to what's happening in the future, in the coming month or two, right? And Trueflation is suggesting that inflation has come down since December. Now, the best the government can give us is a reading of December for inflation, whereas this website aims to give you a reading every day of inflation, so 5.4%. The last reading that the government put out was 6.5%, which is where this lighter blue line is. You can see the Trueflation estimates can be off. Like their peak was 12%, whereas the government peak was 9.2% or 9.1%. So quite different, a little bit off target. Just recently, they've been sort of getting it a bit more on the money, Trueflation, with their forecast. So yeah, I think if this is anything close to what we're going to get, we should get further decrease in inflation. It shouldn't start picking up again. But hey, we'll see. We'll see if there's a decoupling or a total inaccuracy of this website, Trueflation. But yeah, that's the best we got for some kind of prediction. The dollar index, how's that been going? It's been sort of plateauing just above, 100. 101.528 is the low. That's the lowest point we've pulled in so far. And the blue line, 101.297, is a peak Oh no, wait. I apologize. It's a low. It would be testing this low here if we came back down to that point. So possible, you know, I don't want to call it a double bottom. It's kind of like a revisiting of a support line. But yeah, we'll see what we get with that. We'll see what we get. The dashed line is 100. It'd be really nice to get back below that. Now, I think this dollar index, this should come down as inflation comes down and interest rates, you know, either stay stable or, you know, they start to make interest rate cuts. That's what we want to. We want to see the cuts, because that's the pivot. That means they pivoted and they're starting to bring it the other way, the other direction. So I wonder if there's a chart for interest rates. Let me just see. Is it interest? Yeah, interest rate. United States interest rate. There we go. Federal Reserve data. Excellent chart to have in the mix. As is the inflation. I wonder if there's a... It's called like... Yeah, USIRYY. So United States inflation rate year over year by the BLS, the Bureau of Labor Statistics. So you know where these stats are coming from. So that's the interest rate. That's the inflation rate. Let's open up a new chart and compare the two. So if we go to that one, go this. Okay. Now the interest rate, as we know, is reported monthly. They come out with a rate each month. And then we want to compare the, so this is the interest rate. We want to get the inflation rate now. So the US, there it is, the inflation rate. So there's inflation, and there's the interest rate. So as you can see, when inflation in gold, wait, let me make inflation blue. Let's make it red, because it's a negative thing, right? Inflation. And then the interest rate, gold, yellow. So as inflation comes up, you can see that the Federal Reserve increases interest rates to try and combat that inflation. And in this example, you can see that they made rate cuts too early, and inflation took another leg up. So this is why it's bad to cut rates too early before you hit the 2% target. Now 2% is, this is, okay, 2%'s here. Let me draw a horizontal line for 2%. About there, right? We'll just call it that. That's about the target. I'll make it white so it stands out. Now, yeah, the inflation got really out of control in the 70s. There was a peak in 1980 of like 14.88, basically almost 15% inflation. Crazy level. Our peak was 9.1. See, this is the scale here for the inflation. This is the interest rate scale on the right. But yeah, 9.1 is the peak just here for inflation. So I believe Jerome Powell, just like what happened here, is interest rates. See how they made the mistake of dropping them before the inflation came down and hit target? So they dropped them they dropped the interest rate back to like, you know, 4.6%, which wasn't enough to force it back down. So look how aggressive they raised the rates back up again because of this spiraling inflation. Out of control. Anyway, what do we have now? We've got
Inflation came up. We seem to have a pivot, at least for now, and we're heading down. But interest rates remain fairly high. They're currently at 4.5% interest rate. So in order for this red line to come down, let's make this red. In order for this to come down at this same trajectory and hit the 2% target, which is forecast to be hit at around July, August, roughly, if we stay on this path, the interest rate needs to stay tough or high, right? I think 5 is what I've heard, a number that's thrown around. So this yellow line could come up, the interest rate, just to ensure that this continues to come down to hit that 2% target. So there, that's my outlook. Now look at this. The last few times that the Fed raised interest rates, it reaches a terminal rate. So that means it's not going to go higher, it's not going to go lower, it'll just go flat, and they'll pause on the rate. So that's what these flat tops are. It's where they've hit a rate and they keep it at that level for some time. So I think that could be on the cards as well, like as this year sort of carries on. I think we'll get something like this, like maybe we'll go to 5% interest rate, but then it'll remain stuck there, until they start to pivot. So it could look something like that, right? That white line. So there's a little bit of more room to go until we get to 5%, 0.5%. So 50 more basis points. So a lot of people are suggesting that this interest rate decision that's interest rate decision that's coming out next week is a 25 basis point hike. So that'll take us to 4.75 total interest rate. And then, they can bump it up again in a future interest rate release of another 25 basis points, taking us to 5%. And then, either we pause there until this starts to come down to 2%, which is here roughly. So that's the deal. That's the deal with inflation, and this is the most important thing, like, for markets. This situation going on, this matters the most for any if we're going to have any potential of going into a bull market, or returning back to the trend that we were on. All right, I think I've made my point like 16 times already. Sorry about that, but it's important. It's good to know it. You need to understand it. Where are we at? Dollar index, DXY, what has it been doing in the last hour? Kind of just stagnant. No real violent move just yet. We do like to see it come down. It's a good indicator. This is the S&P futures. You can see how close we are to the funds rate. It's a few days away still, but 7 days, 18 hours, so just over a week until we find out how many basis points they're going to hike by, or whether they're going to pause. So we'll see what they have in store for us. So just over a week there. Now, this is the SPY, so this goes into post-market and pre-market. It doesn't actually move when the market's closed like the futures does. This is the futures, S&P futures. You can see that it's pulled back, which is kind of scary. Bitcoin, let me get them price levels back up so we can get a bit of context of where we are. Go to the 15-minute chart. You can see we're still in our range of from the previous week, the weekend that we just had, right?
Do some cleanup. Resistances. Oh yeah, that's the November and September high from last year. What do we got? The weekend boxes. Yeah, there we go. That's about it. There was a falling wedge that we had going on, which since broke out to the upside, which is, you know, the expected move for that. It wasn't a violent move up, it was just it broke out to the top side. Some were calling that a bull flag. Same thing, same result. I'll delete that now. Don't think I have anything in the recent TA box, but anyway. So yeah, that's where we're at. So moving forward for the rest of the day, the critical moment for price, or the critical level to test, would be this short-term support, this blue line, because it's the low from Sunday, our Sunday low. And if we lose that, like if we go lower than that, then that's a break in market structure. And we may be looking to go down and test lower levels for support. So that's, until that happens though, we are still range bound, we're still sideways. I know that we're coming off a retracement within the box, but hey, we're still in the box, you know? That's how I see it. I smooth it out. Like, my eyes see this. You know, we're just bouncing in a rectangle. Let's go down to a small time frame just to see what's happening in the here and now. Turn the logarithmic off. This is where the Monday candle started. So we've gone through Monday and Tuesday. We've just started the Wednesday candle now. Now, Monday, Tuesday, I find those to be more often than not pretty flat, like not as much activity. I think the real activity picks up, say, maybe late Wednesday, but then Thursday, Friday seem to be like the, you know, peak performing days, just like we had back here. This was a Friday. You know, this was a Friday here. I mean, look at this. Here's Monday, Tuesday. Monday, Tuesday, Wednesday, Thursday, Friday. Activity, you know? Look at the next week. Monday, Tuesday. Wednesday had like a violent drop, interestingly enough. Thursday, yeah, not great. Then Friday, the party got started. So yeah, weekends, Monday, Tuesday, Wednesday can be generally pretty boring. It doesn't mean that nothing can happen on those days. It just means it's on average, right? We're just looking at averages here. Anyway, yeah, I think that pretty much covers it, guys. Like, that's all there is to see at the moment. This rectangle, you know? Until we break that low or this high, we are range bound, you know? We're traveling sideways at a level. So we're holding ground. Let me get through some of these comments here. Sorry, I've kind of like been completely in the zone with the charts. What's up, Honest? I just think, I just keep thinking about the Doge chart on its Twitter spike after FTX. I just wonder if BTC is going to do a similar thing. Possibly, yeah. We don't know. Like, who knows where the next pivotal piece of news or event comes out of the woodwork? We just don't know. It can just happen out of the blue, right? Head and Shoulders, with the other shoulder being around 21k. 21k. Maybe if I zoom out on the hourly. I see what you mean. So you're suggesting shoulder here, head here, and then maybe like another shoulder to come. Possibly, it could happen. Like that's how Head and Shoulders work, but it's early to call that. I mean, we haven't even sort of finished forming the head, if that was to be a Head and Shoulders, you know. So it's very early to call that, but maybe, yeah, you don't know, maybe. Could it be a rug pull at the same time, right? Don't know what you were referring to there, but yeah, anything can be a rug pull. Aaron, hey Rick, hey Supple, yeah. Sorry, I read that out and I said hello to myself. Hey Aaron, how you doing? Static, once again, thanks for that $50 there. Really appreciate it. Putin can still ruin the party, yeah. And everything else. If currencies continue to collapse, Bitcoin will rise, in my opinion. Yeah, possibly, yeah. That could be like a scenario where people give up on the fiat. That'd be a very dramatic dystopian kind of thing for the fiat system to totally collapse. I don't think it will, but yeah. I think the world for a very long time is gonna have fiat, you know, whether it becomes a CBDC, like, you know, a digital currency, but fiat's going to be a thing, you know, whether we like it or not. Fiat is a reality that we have to live with, and we've been living with fiat all our lives. It's nothing to fear. You know, we're comfortable with the way the world works right now. We just want better, which is why Bitcoin came along. But yeah, look, I think there's space for both to exist, you know. It's coexisting right now, right? Bitcoin's surviving. Crypto has been around for 11 or so years. It's coexisting with fiat, with the current system. The current system doesn't even feel threatened by crypto, which is why it hasn't been banned or like cancelled. Some countries it has, but for the most part, like at least in the West where we live, if people are living in the East, I do apologize, but for the most part, yeah, I think most of the world is, you know, accepting of crypto. Like, you know, that they'll let it be. At least Bitcoin, anyway. Crypto, that's another question. The altcoins, right? SD Willie, remember people, crypto still not legal in many places, but when it is, I think last bull run will look like small fries. Yeah, possibly. Yep. We'll just have to wait and see, hey? Aaron says, how long can you go? How long can we go? Yeah, well, hopefully a long time. The other Aaron says, great analysis on the chart. Thank you. I try. You go to any Australian Open matches? Nah, I haven't. I've been keeping it, like, I watch it, like, bits and pieces of it. But yeah, I haven't been following it that closely this year. It was good to see Medvedev get knocked out, because he's like a major threat to taking the victory, like taking the slam, you know. I think he got into the finals last year, but got beaten by Nadal, which was great. A great match. That was awesome. Aaron says, I think Bitcoin charts have absorbed the news coming out tomorrow with this retracement, and we look to go sideways with a steady move to the upside. Yeah, I'm on board for that. I can see that being a possibility. A lot of like analysts on YouTube, and there might be something to this. A lot of them are suggesting that we're still unsustainable up here, that we have to retrace. And, you know, maybe that's true. Maybe we do have to retrace, you know, and that would be totally okay. You know, it's healthy for markets to take a step back on the way, you know, if they're in a bull trend. You can see that on a small scale. If we zoom in on the 15-minute chart and look at how we climbed
It's not just up. There are periods where, you know, you retrace, you pull back. You know, here we pulled back pretty violent there. But the point is, when you go up, you want to go up faster and further. Not faster, but further than you pull back. That's the point. You want to take 2 steps up, 1 step back, 2 steps up, 1 step back, 2 steps up, 1 step back for an uptrend, a healthy uptrend, right? Or in this case, we're staircasing. We're sort of doing this, which can happen too. You know, these are called, I call these time consolidations. Time consolidation. Whereas these are price consolidations. Price consolidation. So time or price, both can happen. You can get a time and price consolidation where it goes like for a while of time and price gets lower. But I mean, these seem like time consolidations. Like it's staying at a level, letting that RSI cool back down, letting it cool back down, letting it cool back down in preparation for, you know, the following legs up. You know, the legs up, the legs up, the legs up. So that's how I see it. Could we be in just a flat consolidation like all the previous ones that we've sort of been seeing over the past few weeks here? 3 weeks. Maybe so. But anyway, I'll leave it on this note. I think this is the level that we should be paying attention to, this blue line. So $22,300 or thereabouts, and also $23,370. That's the resistance. So we've got our support side and our resistance side. We are stuck in the middle right now. We're zigzagging around. It's just that we're in a zag right now, and we're hoping for a zig. You know, zig, zag, zig, zag, zig. Hopefully we get a zig. But, you know, obviously we can come down and test the previous lows just to see if they hold. But yeah, we'll know more hopefully by tomorrow during the next stream. Anyway, guys, I really do appreciate you coming and tuning in and keeping me company. All the best for your trading today. If you're trading, have a good evening, good day, wherever you may be, and I'll catch you tomorrow. Have a good one.